How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, right off the bat, tomorrow is Thanksgiving, so I not only want to wish each and every one of you a happy Thanksgiving, hoping you're spending it with family and friends and all those you love. But I also want to take one moment here to just share with each and every one of you that I'm incredibly grateful for everybody out there who has either been watching the Blue Lion Finance channel, liking the videos, subscribing to the channel, whatever you've been doing out there. Thank you from the bottom of my heart, because without all of you, there truly is no me. Now, with that being said, the account update on the day is we are sitting at $83,249.80. That is actually down by since my last video. That comes after bouts of volatility from Treasury rate hikes, and of course we had a tech sell-off since Monday's video. But ultimately, with Jerome Powell being renominated to lead the Federal Reserve, I believe that's going to deliver some stability, which is exactly what the market likes, that predictability and certainty, and Jerome Powell fighting inflation, which is what he has promised to do. So with that being said, in today's video, I just want to kick us off here before Thanksgiving and talking about what exactly I've been doing in my personal portfolio. I've sold out of one position entirely. I think you're going to be very surprised as to what position that was, considering I'm a dividend investor. And then most importantly, get into the 3 stocks that I've doubled down on, picking up more shares of each of them. Of course, just before we dive in, go ahead, tap on that thumbs up button, as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. Most importantly, if you yourself have not already subscribed, go ahead, tap on that subscribe button while you're at it. I'd love to have you along for this journey with me. Now, YouTube, let's go ahead and dive right in. So it's almost interesting for me to start off the video by talking about the one position that I've sold out of entirely, and that is because I'm typically the investor from video to video, just talking about doubling down on high quality stock positions and holding on to them for essentially forever. But here I am now talking about a position that I'm just selling out of or have sold out of entirely, and that is atypical to my approach, which almost makes me in some sense feel like I've either failed all of you or failed myself from investing in this type of position from the first place. But that is actually the farthest thing from the truth, because in actuality, what I have found is that there is a better suited position for me and my personal financial journey, which I believe far into the future is going to deliver a stronger return on my investment. And I think many of you are going to be surprised as to what position that I sold out of. That position being Invesco S&P Low Volatility High Dividend Yield ETF, ticker symbol SPHD. Now, right in the name, you can get a sense that this type of fund is all about, well, a low volatility yet high yielding dividend stock player. Now, that is exactly what it is, coming in with a dividend yield of roughly 3.86%, paying monthly dividends. So what the heck is an investor like myself doing investing out of this position and into other positions? And it actually all stems back to the founder of index funds, Jack Bogle's advice, and in talking about getting invested into the broad market when you're investing into an index fund or in a fund in and of itself. Have a look.
Last month on Louis Rukeyser, you summed up your investment philosophy as buy everything and hold it forever. Do you still subscribe to that in light of what the market has been doing, or would you unload some things now?
No, my theory is not subject to the ups and downs, the peregrinations of the stock, the unpredictable peregrinations of the stock market. It's painful to do, but I think the idea of owning the stock market is the best approach to equity investing, and perhaps I didn't make that thoroughly clear there. I have never felt that equities should be the only portion of an investor's long-term program. I myself am about 50% stocks, 50% bonds, for example. I was brought up when I came into this business in 1951 with the Wellington Fund, which was and is, and I hope always will be, a conservative balanced fund. But I think the idea of buying and holding forever and not trying to make adjustments requires that you've gotten it right in the first place. That you can only hold tight if you've bought right, if you will. And that is to say, have an asset allocation that has something to do with how many years you have to accumulate money, how much resources you have at stake, how much income you need, and how much courage you have to ride out the peregrinations of the market.
And there you have it from Mr. Jack Bogle himself, the founder, the mastermind of index fund investing. Now I'm taking this approach in selling out of SPHD simply because I am looking to just throw more and more money into a broad market index fund, which is, yes, going to deliver slightly lower returns in terms of its dividends, but it's actually going to pay far more in terms of growth over the long run, which is what I personally believe and exactly why I'm making this move. So as of yesterday, I went ahead to sell my 3 shares worth of SPHT, and I know not a lot of shares, but nonetheless $130.41 back into my pocket to get reinvested into what I believe is a far better fund, that being the Vanguard Total Stock Market Index Fund, ticker symbol VTI. Now, Vanguard's Total Stock Market Index Fund is exactly what it says in the name. It is a fund that is tracking the performance of large, mid, and small cap equities, but has a heavier emphasis on growth stocks than it does just dividend plays. Again, over time, I believe this is going to be much more of a valuable investment that's going to exponentially grow my portfolio, which is exactly why I made this move and pulled the trigger. I mean, we're talking about companies like Google, Apple, Microsoft, Meta Platforms, United Healthcare Group, JP Morgan, and we're just talking about some of the biggest plays across the board, and of course, a lot more growth opportunities that are within this fund. Of course, they're not going to be paying out as much in terms of dividends. I believe VTI is averaging around a 1.86% dividend yield, and it's only paying quarterly dividends, but I am most focused on the growth over time, and just taking a look at about a year's worth of growth in terms of VTI, we can see that it went from $187 a share up to $240 per share. Now, if we go out even further, over a 10-year period, we can see that VTI was just absolutely demolishing expectations here, going from $59 a share to $249 per share. Now, this is just growth that I want to be able to capitalize on. You literally investing in an index fund like VTI do not have to do anything whatsoever other than throw more and more money into it and just collect on the return on your investment. And of course, this is a fund that I've been invested in for quite some time now, so I've only added to my position when it comes to VTI. I picked up 2 more shares the other day for $239.31, bringing my grand total spent on VTI to $478.68, and my share count up to 12 total shares worth of VTI. Now, over the long run, I'm just going to be dollar cost averaging more and more into VTI and allowing this index fund to do exactly what it does best, which is deliver a solid ROI to all of its shareholders. Now, I did not stop there, because as I was in a buying mood yesterday, I went ahead to pick up more shares of Johnson & Johnson, ticker symbol J&J. Now, Johnson & Johnson's, of course, a company that I've been talking a lot about lately. It is a company I am certainly doubling down on and looking to just grow a massive position with them. Now, in recent news, Johnson & Johnson has that rollout coming where their consumer goods segment is going to be rolling out into a brand new business, leaving their pharmaceutical segment and their medical device segment coming together to just create an absolute powerhouse within the industry, myopically focused just on those 2 segments. I believe they're going to rock the industry and just continue to lead us well into the future. That stock share price of theirs is bound to surge. Now, analysts have those very same expectations, with a median stock share price coming in at $183.50, a high stock share price of $215. And of course, Johnson & Johnson is a dividend king. This is a company that's been paying dividends out for 59 consecutive years and increasing those dividend payments every single year. Their current dividend yield is sitting at 2.6%, so the exact type of company that I want within my dividend portfolio. Now, yesterday I went ahead to pick up 3 shares worth of Johnson & Johnson for $160.26 each, bringing my grand total spent on Johnson & Johnson to $480.78, and my share count now up to 23 total shares of Johnson & Johnson that I'm only going to continue to grow over time. Now, after throwing a hefty amount into VTI and Johnson & Johnson, I realized I had some money left over in my settlement fund, did not want that to go to waste. So I went ahead to throw some money into Realty Income, ticker symbol O. Realty Income, for those of you who are brand new to the channel, is a company that I often talk about. It is a REIT, a real estate investment trust, that is hands down my go-to pick when it comes to investing in REITs. It was founded back in 1969, has established itself very well within the industry, developing a portfolio that is very well diversified, over 7,000 properties spanning across the United States, well into Puerto Rico, the United Kingdom, and Spain as well. They have over 650 clients. This is just a dominant player within the net lease solutions game. Now, most importantly to understand regarding Realty Income is the recent acquisition of another REIT called VEREIT. Now, this REIT in and of itself was very similar to Realty Income, but it goes hand in hand with the Realty Income portfolio. This is now going to actually grow the Realty Income portfolio to over 10,000 properties, and in my opinion, is just gonna help the actual stock of Realty Income continue to grow. Analysts have those same expectations as they foresee Realty Income stock jumping up to a median stock share price of $77.95 and a high stock share price of $87. Now, until it reaches those stock share prices, we're just collecting on Realty Income's monthly paying dividends at a dividend yield of 3.99%, very much in the sweet spot of a dividend investment that I want to get invested into. So yesterday I picked up just one more share of Realty Income for $70.64, bringing my grand total share count to 67 shares worth of Realty Income. Now, I'm only going to continue to push towards my goal for 100 shares worth of Realty Income before moving on to my other two REITs of choice. Now, that is it, YouTube. Between investing in VTI, Johnson & Johnson, and Realty Income, the three stocks I've doubled down on this week, selling out of SPHD. Now, if you liked what you heard, you learned something new, drop those comments below. I'd absolutely love to read through them. Once again, happy Thanksgiving to all. And of course, before we conclude here, tap on that thumbs up button to help me grow the Blue Lion Finance channel. If you haven't done so by this point, go ahead, tap on that subscribe button. I'd love to have you on this journey with me. Now, YouTube, until the next video, I will see you all there.